Watcher Glitches. I'm with my old friend and CTO of Pave Bank, Simon VC, and we're going to talk about programmable banking, programmable money, and DeFi tokenized economy, essentially the tokenization of real-world assets, and where we think programmable banking can reduce friction for all of this. But the first place to start, I guess, Simon, as you're the visionary behind programmable banking, can you introduce yourself, tell us what programmable banking is and what Pave Bank are doing?
Sure. I'm Simon, I'm the CTO and co-founder of Pave Bank. I know Hoos for about 20-something years now. We worked together a long time ago on some of the UK's payments infrastructure. Since then, I was part of the founding team at Monzo Bank. I was the first engineer hired there. I was there for 5 years, and as part of the thing that I was working on at Monzo Bank is the team that built the API, the open banking APIs. And the early days of open banking in the UK were really interesting. Like, nobody really knew what a bank with an API you could do with it. And a lot of people would come to me and basically they'd ask, companies like Plaid and TrueLayer and end users as well would come to us and basically say, like, the API is great, we love what you're doing with the API, but can you do this, or can it do that, or can you modify it to do something else? And at the same time, there was a law called PSD2 coming from the European Union that basically required all banks to have APIs. And that was really interesting because Monzo, we had a developer API. Like, we were engineers and we wanted to access our own bank through our own API. So we had a developer API from literally the day we launched. But PSD2 came along and it made it a regulated activity to access your own bank account, right? So on the one hand, PSD2 said that all banks had to have APIs. But PSD2 also said that normal consumers couldn't access their APIs. They could only companies that had the regulatory permission, the account information service provider, were allowed to connect to customers' bank accounts. And that kind of rubbed me the wrong way a little bit. Like, I believe in, it's your money, it's your account, you should be able to do what you want with it, right?
Yeah.
So I did a couple of things. I fought really hard to keep the Monzo developer API public, and it still is.
Yeah.
So you can access your own account. And I also made sure that Monzo continued to have, and it still does have, webhooks, which is actually like a really simple to integrate thing for people who aren't perhaps API developers. Like, you can basically just point the Monzo developer webhook at anything. Like, you could point it at your Zapier account, or you could point it at something that just caught your webhooks, and you could build all these cool stuff with it, right?
Right.
And that actually got more traction than the developer API. Like, people were just building good stuff using the webhooks. And that got me thinking, like, how far could we push that? So I led a team, actually, which wasn't really a team, it was just me and Kieran McHugh, but we, in secret, without telling anybody, Tom, the CEO, knew, but we basically built an integration between Monzo and If This Then That. Right. And that was sort of like the beginnings of programmable banking. Like, it was the idea that you could connect your bank directly into a service that you could automate things, right? So you could do cool things like, when my salary comes in, play a song on Spotify, like, it must be the money, something like that. And people blew me away with the cool things they built. People built like the 1p savings challenge. So on the first day of the year, you put one penny into your savings account, and then 2 pennies on the second day, and 3 pennies. And by the end of the year, you're saving like, $3.65 per day. And it adds up to like $600 or £600. And that was really cool. I never expected people to build that, something like that. People built lots of really interesting things, but I kept thinking, like, this is cool, but it's still quite limited. Like, there's still you can only really, like, the cyclomatic complexity of what you can do with if this and that is quite small, right? And you could really only sort of like take one trigger and connect it to one action at a time, maybe with one where clause,
Okay.
And I wanted to do things that were much more complicated. So I started thinking about how we would build a system that let you encode your, like, what you want to happen, and like automate things with the full complexity that's available with programming languages.
Right.
And back when I was doing this in 2018, the technology wasn't there, and it was like super risky, and so we didn't do it. But then about a year ago, myself and my 2 co-founders, we decided that it was time now to take a stab at building the world's first programmable bank account. And we raised a bunch of money from really great investors. And like, the story that we told them about why this is important goes like this. Back in 2009, everybody used to go out and buy feature phones. And if you wanted your phone to do something that didn't do the day you bought it, then you had to go and buy a new phone.
Yeah.
I remember I had like a really cool Nokia phone, but I wanted to play music on my phone, so I went back to the shop and I bought the Sony Walkman phone, right?
Right.
So you bought the phone based on the features that you wanted. And bank accounts today are like that. You choose a bank account based on the features that bank has,
yes.
right? Like that bank might say that, we have a direct integration with Xero. So you're like, okay, cool, I'll use that bank. Or it might say we have a system that will automatically balance between two currencies. Like, okay, I want that one. I'll go and buy that bank account.
Yeah.
And so in a way, everyone in the world right now is using feature bank accounts. And what we want to do is we want to move to a world where you have like a smartphone for banking. Right? You have a bank account, and if it doesn't do what you want it to do, you should be able to write an app. Yeah. And that app then adds functionality to your bank account that your bank account didn't already have. So that was sort of the idea. And the more we think about it, that model really works, like the app store for banks.
Yeah.
But I'm an engineer, and before you have an app store, you have to have a developer ecosystem. And the first people on the Apple App Store it was George Hotz when he jailbroke the iPhone so he could run apps that he wrote himself, right? Like developers desperately want to access the programmability of anything. If your bank account can't run Doom, like what is it, right?
Right.
So when we're talking to investors, we sort of use the concept that this is really sort of like the first smart bank account. Yeah. When we're talking to regular consumers, we say like it's going to be a bank account with an app store. When we're talking to engineers, we're like, no, we're building an operating system for money. Yeah. When we're talking to blockchain developers, we say we're bringing the functionality of smart contracts. Like a smart contract is you basically write code and upload it to the distributed ledger, and it takes actions on your behalf. What we're saying is that we're going to create an execution environment where you can sort of bring smart contract-like functionality to your centralized ledger, so your fiat ledger, so your bank account. Yeah. So we're basically building an operating system for money that you can write apps and run them on your bank account, and they can take action on your behalf.
Yeah. So I think that's the bit that fascinates me more than anything else. There's loads of use cases for programmable banking. We've looked into, easily scratching the surface, 20 use cases for TradFi, for simplifying, standardizing and automating treasury, liquidity, you name it, operations that exist. But there's another set of use cases which is bridging TradFi and DeFi. And I think programmable banking is almost like the UX UI that's been missing in the crypto sector. It's like the holy grail for adoption. Yeah. And in the retail sector, you've got some very good wallets that are doing that for consumers. But DeFi to be consumed by institutions is absolutely lacking. Yeah. And
there's a really good computer science reason. Like if you work as a distributed systems engineer, like people who build distributed databases understand this thing called CAP theorem, right? Which is that you can choose any two of the properties, consistency, availability, and partition tolerance. Right. And chains basically, they choose consistency and you have to choose partition tolerance. Otherwise, you're only allowed to have one computer, right? Yeah. As soon as you want to have a decentralized anything, you've chosen partition tolerance. Yes. Now you have to choose availability or consistency. And the blockchain world, like Satoshi Nakamoto solved the Byzantine generals problem. He basically found a way to get consensus, to get consistency, but you do so at the cost of availability. Like the reason it takes 10 minutes to mine a Bitcoin block is because it's unavailable. Like you can't do something instantaneously. Yeah, right. You have to wait 10 minutes. Yeah. So we're making it, okay, so and CAP theorem applies to systems, right? And if your business is doing something which is on-chain and off-chain, right? Then the system that you're dealing with, right? It's not like a blockchain and a bank. It's a blockchain and a bank. Like that's your system, right? So you're forced to choose partition tolerance because part of your system is over here and part of your system is over here. Correct. Now, with all of the banks that exist in the world right now, you have another problem, that your bank can't run smart contracts, right? So what you're forced to do is you're forced to build a distributed system with a blockchain that might have smart contracts. Plus you have to have your middleware, right? Plus you have to have your bank. So you've got, there are three components in that system. So you've got this middleware component that's constantly trying to synchronize between a distributed ledger, like the blockchain, and the non-distributed ledger, your bank. And if that ever breaks, then you have a consistency problem. And that manifests itself as, you shipped the goods, but then the transaction didn't commit. Or a customer deposited some funds and you let them make a betting transaction, but then the funds got reversed, right? So you've got a consistency problem. Or your middle, and the crucial one is you've got your middleware software. Your middleware software was down. So it missed an on-chain action, and now the on-chain representation of your tokens doesn't match the off-chain reality.
You forked your reality, right?
So if you can move part of the logic out of that middleware and into your bank's ledger. So now you've only got two parts of the system.
Right.
You've got your distributed ledger and you've got your bank ledger. And there's still a system, there's still a divide there, but it's one less component that can go wrong.
There's fewer counterparties.
Exactly. And one of those is DeFi, and it's chosen consistency and partition tolerance. So it's going to take 10 minutes to move things on chain. But the other one is CeFi, it's Pave Bank. And we've chosen consistency and availability because we don't have to choose partition tolerance. So we are a centralized authority. There's nothing decentralized about it. We don't use any blockchain technology. We run everything ourselves. We are the proof of authority. And we take on the burden of AML and KYC and transaction limits and all of those rules. And we sort of execute that in the fiat land. But it will make it much simpler for you to build products that span all the way from blockchain to the real world.
And it's that bit, real world asset tokenization, which I think is going to be huge, right? There are a number of narratives in like the crypto sector that are going to revolutionize finance. One of them is real world asset tokenization. And I think this is going to pick up at pace. We're already seeing participants in that ecosystem, whether it's issuers, distributors, investors, and asset owners, real world asset owners. We're seeing platforms and blockchains created for that. The problem there is, as you know, and I know, if you wanted to set up a startup to do real world asset tokenization tomorrow, you're going to need 2 million pounds, let's say. You're going to need a runway, you need hiring, you're going to have to build your own stack, you're going to have to manage commercial relations.
You're going to have to find an operating account at a bank.
Correct.
You're going to have to convince them that, because what's really happening is that bank then is trusting the issuer of the tokens. Right? To do and they have to see through the AML and KYC policy of the issuer of that tokens. So to build anything right now, you have this problem that you have to basically do all of the hard work up front before you can expose this product, might be a tokenized asset or whatever, to the real customer base. But with Pave, what you can do is that you just write software, right? So you might just say, I've built a piece of software that watches a particular oracle or a particular smart contract, and will take action in the real world based on that, right? Now, you as the developer of that piece of software, you don't need to run that software for all of the customers or all of the users of that blockchain technology, right? You can basically say, I've built the smart contract. The smart contract is running on X blockchain, and I've built the software that synchronizes with that smart contract, and it's in the Pave Bank app store. So the developer of that protocol or software or whatever can basically then say to people who might want to use it, it's you sign up to Pave Bank. You go get yourself an account at Pave Bank. The CeFi part of this system is in the Pave Bank app store, and it'll, you can pay a certain amount of money per month to run it, and know that it will connect to the oracle or to the blockchain, and it all just sort of works like that. And so you can basically build these products without having to worry about you becoming the sort of the narrow pipe between blockchain land and not.
Absolutely, you avoid all of that friction. And I think this is the piece that's missing. This is what can catalyze real-world asset tokenization, because without it, I think every institution that's doing it, there's a certain amount that you need of capital, a certain amount of expertise. All of that is friction. Whereas if you get yourself a Pave account and there are Pave apps available, you apply them to your account, and bingo, you're up and running.
Exactly.
So it eliminates all of that friction.
It's really easy if you talk about a specific use case, right? I have this friend. he was running a really tiny little app, and it was just dollar cost averaging. Like that is a dollar cost averaging is a product, right? He wanted to make it simple for people to round up their transactions and put their spare change into crypto.
Yeah.
Right. So he went out and I first got introduced to him because he was looking to get an operating account so he could receive that fiat payment.
Yeah.
So that he could then build an app, and then that app would basically then take the fiat payment, buy the Bitcoin, and allocate it to customers, right? And he never got that business off the ground because he couldn't find. Basically, what he was doing was he was trying to bridge crypto land and TradFi, but it wasn't a big enough, successful enough proposition that he could raise enough money that he could find an operating account that he could build that business.
Right.
Now, if he wanted to do that on top of Pave Bank, right? Dollar cost averaging into crypto is like 4 lines of code, right? It's like, insane. What is the price of, like, what is my budget every day? Like, say I want to buy $100 worth of Bitcoin every day. It's like, the trigger is at 9 a.m. in the morning, and the action is take some of my US dollars and buy some Bitcoin from this liquidity provider, which is also on Pave Bank.
Yeah.
So instead of him having to like bootstrap this business by raising millions of dollars and getting an operating account and doing AML and KYC, he just writes the app and puts it in the Pave Bank app store. Now, so you can take these products like dollar cost average into Bitcoin, and you can basically build an app, and you can put that app in the Pave Bank app store. And like that's a really tiny, that's like my hello world for how simple of a product you could build on Pave Bank.
Absolutely. And like by lowering the friction or eliminating it almost entirely, the possibilities that you open up are really just bound by imagination more than anything.
And there's a lot of low-hanging fruit. Like in the whole, there's so much low-hanging fruit. Like when the Apple App Store came out, there were like mum and pup developer shops that became like $100 million companies. Like Rovio is a great example, right? There's going to be an enormous gold rush like when we like break through and open up this seam of developers, because there's so much stuff you just can't do on a bank with an API. Like another really classic example is if you run a bank, then you have customers come to you all the time and ask you to do like crazy use cases. Like imagine if you're a construction company and you want to give the foreman of your construction sites a Visa card, right? But you want that Visa card, you don't want them spending money in a bar or whatever. So you want to set some specific rules, like they can only spend money from Monday to Friday before 4 p.m. in hardware stores, right? So if you go to like DBS or Barclays Bank and say like, how do I configure my Visa card so it does that? Barclays is going to be like, I mean, unless you promise us 100 million in volumes per year, like we just don't do that. We cannot do that. And you can't build that with an API, because an API is the customer makes an API call into the bank. When a card authorization comes in, the card issuer, the bank, Barclays in this case, has like 150 milliseconds to respond to Visa, yes or no, right? So the bank can't make an API call out to some random mum and pup shop to say, should I authorize this or not? But with programmable banking, you basically write down the rules. Like, is it Monday to Friday? Is it before 4 p.m.? And is the category code a hardware store? You write 4 lines of code, you put it in an app, and you put it in the Pave Bank app store. And then every issuer of every construction company out there can basically sign up to Pave Bank, issue cards, and download the app from the Pave Bank app store. And now they've got a card that does exactly what they want. Precisely. And there's so many of these like incredible use cases that are just like super simple to build. But we're really excited to just get this live.
And what's fascinating as well is a lot of these use cases come from like programmable money. In the crypto space, the imagination is there, but I think no one's actually looked at, okay, you could do it at the money level, you could do it on a blockchain level, but it's actually a lot better to do it at the bank level, at the bank app level. No one's really thinking about this. And look, programmable banking has been around for quite a long time, but it's always been constrained. Like some of the constraints have been beyond 7 or 8 steps of programmability. Most people who have been creating programmable banking applications, they're not programmers, and
most people with a product idea, they don't want to have to deal with AML and KYC, and they don't want to have. They just want they want their product idea. Like they want to do just enough engineering that the product vision comes to life, and not worry about all of that other stuff, right? But in our world, like we've decided that banks should be responsible for the prevention of financial crime, right? Like that's just all governments around the world have decided that. It's the cost of doing business as a bank. You might as well do it once, and not every single fintech out there trying to have to do it multiple times.
Exactly.
And like there are like the Byzantine general problem, the one that Satoshi Nakamoto solved, right? We don't actually live in a trustless world. We live in a trusted world. Like the vast majority of trade, you always have a trusted party. You have escrow. If you buy a house, you don't give the person cash. You give your lawyer cash, and your lawyer, lawyers are basically hold their cash in escrow, and they hold the house deed in escrow, and they swap them, right? And so there's always going to be a place for a trusted central counterparty. Correct. And like that is the future of banking. Like banking is to be a trusted central counterparty. Yes. All we're doing is we're basically saying that instead of exposing a tiny amount of that, we're going to expose a lot more of that, right? A lot more of that functionality programmatically. And
eliminating a whole load of other counterparties that currently that you have to deal with. So
banks didn't get into the difference between Bitcoin and Ethereum is really interesting, right? Bitcoin apart from ordinals, which like I'm not getting involved in that, right? But like Bitcoin only has payment. It doesn't have delivery. So you can send money, but you got to trust the person actually sends you the goods. Ethereum has payment and delivery, so you can do atomic swaps. You can say I want to swap some Ethereum for some Lido, or you can say I want to swap some STS, whatever. You can swap, you can do atomic swaps. You can say I want to buy this NFT. The NFT might represent a house or a gold bar or whatever, and I want to pay with USDC, right? And it either both happens or it doesn't happen, right? So Ethereum basically fixed the PVD problem, right? Trustlessly. But for the vast majority of trade in the world, we actually have banks that look a lot more like Bitcoin. Like you can go to your bank and you can send $1 million on Swift, but you can't get the house deed back.
No.
Right?
No.
Even though banks are protected by the government, and the government has a monopoly on violence, so they are the perfect place to be a central counterparty. They've just never had the ability to take part in a delivery part. Right. But now, because of tokenized real-world assets, right? Like the full force of the law sits behind these tokenized real-world assets, and banks are allowed to custody these tokenized real-world assets. Suddenly, it's like old banks, like Bitcoin, payment only. New banks, payment and delivery, and can do atomic swaps. So Pave Bank will have the ability to do atomic swaps in its own centralized ledger. So you might be able to put an NFT into your bank account. Like we don't care. Like your bank account has an Ethereum address. You can send an NFT to it. You can write a programmable bank app that basically says collect money from all of these different people and issue them a fractional share of this NFT. And the NFT is being custodied by your bank. You could also build a programmable bank app that says somebody comes along and sends the right amount of US dollars into this account, we will send them the NFT. So you can build all of these things that cross not just atomic swaps between things that are representable on the Ethereum ledger, but you can build atomic swaps across fiat and crypto at the same time. And it can also all be trusted, all be guaranteed and operated by a trusted party that you can sue, frankly.
Absolutely, and I think this is what's been missing. I mean, programmable banking is the missing piece. We've got programmable money, we've got decentralized finance, and we've got cryptocurrencies, we've got everything that's happening on the blockchain. The banking piece, like a lot of people from crypto, and like you and I have been in crypto for quite a long time.
Ever since I told you to buy Bitcoin, you told me to buy silver.
That is on Twitter, yes.
It's on Twitter.
So that can be attested to. But I discovered Bitcoin at the end of 2010. I buy the ethos in terms of decentralization, reducing the number of counterparties. But at the same time, as long as nation states exist with a monopoly of violence over a jurisdictional area, you're going to have to deal with them. And they're not always necessarily against you all the time. For sure, some are and some aren't, and they change over time as well. It's just dealing with reality rather than being an ideologue around crypto assets, currencies, and how they're used.
Yeah, I'm not a crypto maximalist at all. I believe there's a place. You can't. I believe there's a place for banks. There will be a place for banks. I mean, this is the second one I've helped start. So I do believe I'm long crypto and long banks, and I think the merger of those two financial worlds is where we want to be.
It's inevitable, and it's just how does it happen? And don't predict the future, program it. Program it.
I like that. That's good.
Well, let's end there. Thanks a lot for your time, Simon. Really appreciate it, and hopefully you get to speak again quite soon. Obviously, I'm keeping tabs on everything that Pave Bank is doing, but have a look at Pave Bank. keep an eye on what Simon's doing and the rest of the team. And I'm administering Facebook, the Crypto GB group. You can find me there. You can find us both on Twitter as well. I'll leave all the details in the show notes. Thanks a lot, Simon.
Peace out.
GoPro, turn off. It never does it.